Hey guys, welcome back for episode number 2 of season 3. I'm so excited for this one. You found true fintech OGs when your guests were almost roommates before fintech was even a buzzword. And that's exactly the case with today's guests. I have Sheel Mohnot and Amit Kumar, two longtime friends and collaborators who've not only seen the fintech industry evolve over the last decade plus, but they've helped shape it and often helped shape it together. In this episode, we dug into their early startup days, fee fighters, CardSpring, and Twitter M&A tales, plus what it looks like building before infrastructure existed and the bets they wish they'd made sooner. We got into everything about talking about Apple Pay and what that has accomplished, why modern global Venmo still does not exist, what Sheel looks for in the next 10 years of fintech innovation, and why Amit advises computer science majors to do their master's degree at Stripe. Whether you're a founder, investor, or just love hearing two friends go deep on the evolution of a category that they've helped pioneer, this episode is packed with insights and reflections, and I'm so excited for you guys to tune in. Go back and listen to the first episode that we did too with David Marcus and Dan Kimmerling. Lots of great info there on payments, stablecoins, Bitcoin, what it's like being an entrepreneur, the highs and lows, etc. They both have so many great experiences. And then if you want to go even deeper on stablecoins, I help out Commerce Ventures with their podcast, Commerce Conversations. And we just wrapped up a 3-part series on stablecoins, talking to folks from Bridge, Goodwin and Procter, MoonPay, and Conduit, across the spectrum of things going on in that space. So definitely dive in if you want to take a deeper dive. Otherwise, let's dive into today's episode. Amit was just telling me that you guys were almost roommates like 10 to 15 years ago.
That's true. Yeah, that is true.
I think that's the first fintech OG pairing I've had where that was the case.
It was, the fintech world was a very small world, and so was San Francisco. And so if you worked in fintech or tech, you got connected and you were friends. And Sheel and I met through mutual friends back in Chicago when he was moving out to SF. It literally happened. Like, we're almost at the point of moving in. And then, of course, things went a little bit different. But we've known each other forever.
Where were you both working at that time?
I was at Groupon.
Yeah, he was at Fee Fighters, and then Fee Fighters
got acquired by Groupon.
And then I was still at CardSpring. CardSpring was also like a small fintech business, and we sold it to Twitter in 2014, back when it was called Twitter. And I used to live in Hayes Valley, and the Groupon office, I think, was a block from where I lived. And so I would just bump into on the street. The fintech world is super small. And so actually when CardSpring was going out and talking to potential acquirers, Groupon was one of the groups that we actually spent a bunch of time with.
Awesome. Okay. Well, thank you to Amit and Sheel for joining me today. I'm super excited to kick off the second episode of our 3rd season of the Fintech OG series. Why don't you both give me just like a quick 60-second intro on what you're currently up to, and we'll go from there.
Great. I'm a partner at Excel. I lead seed Series A investments at Excel, and one of the categories I look after is fintech, and I'm very fortunate to have invested in some really interesting fintech businesses. Most of the good ones actually with Sheel, so it's really good. And to your point, it's a very small world.
No wonder you guys have remained friends then. If he was leading you astray, this wouldn't be happening.
My friendship with Sheel dates back a long time. We met in the year, I think, 2012, just still super early days. I was a fintech entrepreneur. I started a company called CardSpring, which did card-linked offers, and we sold the business to Twitter in 2014. And then at Twitter, I helped lead engineering for Twitter Commerce and built out Buy Now, offers, donations, like a bunch of products, of fintech products that Twitter was experimenting with, and now in the investing world with Sheel. But very fortunate to have known him before either of us were investors.
Yeah. Also, just in the world of fintech, it's forever ago. Like 2012, to the point of this podcast being about OG is, at that time, you kind of knew everyone in the world of fintech. There wasn't really anyone we didn't know, or companies, like every company you'd heard about them, or you met them somewhere. Even though I was living in Chicago, I like knew every fintech entrepreneur at that time. Now, even as an investor, it's just hard. I don't know them. Anyway, back to my background. I run a fund called Better Tomorrow Ventures, my partner, Jake. We're a fintech focused fund investing at seed and leading rounds. As Amit said, we're fortunate to work together on a few companies. Prior to starting BTV, I started another VC fund. Prior to that, I was investing a little bit of my own capital and was the founder of a couple companies.
And you decided
Yeah,
to get
and
around
just to give you context on 2012, CardSpring started in 2010, which is the same year that Stripe founded. And the running joke was we started a slightly less successful API business. It could have been so much better and bigger, but to the point of 2012, it's really an era ago from where we are today, and the proliferation of founders and investors and really world-changing companies across so many different categories.
That leads me to the next question really well. Was that your first foray into fintech, or had you done other things in fintech before starting CardSpring?
Yeah, I would tell you that the definition of fintech is so broad, and so it could be applied to anything. And under the right lens, the narrative of my previous startup could be a fintech business because payments is involved in almost any company. And some companies that are in the GovTech space are actually secretly payments businesses, and companies do a really good job of pretending they're in a different category when at the end, the core business models around payments and transactions. But CardSpring was like a true blue payments company, like a fintech company. It's when you get that, the fintech Bible as part of your welcome package, joining the company, that's when you know that this is a real fintech company. And almost everybody at the company still is in fintech in some way or shape or form. Engineers at Chime, they're at Affirm, they're at Stripe. And that tends to be a really good indicator of whether it was actually a fintech company.
I was not sure of Fee Fighters, actually. So Fee Fighters, Josh, our CTO, became CTO of Boom, the supersonic jet company. Sean is CEO of Kin, homeowners insurance company that I'm fortunate to be an investor in. That's a fintech company. But Stella founded a company in the AI space, not fintech. But anyway, I think of my pre-Fee Fighters fintech background. I'd say my fintech background starts on the nonprofit side. I was at Kiva making microloans in India. Kiva is a website where individuals can make loans to people in the developing world for the sake of alleviating poverty. And that was my first foray into fintech. And then I ended up working at BCG. And when I was there, I primarily worked on financial services, not a whole lot of tech, but a lot of fin, and then left to do Fee Fighters.
And what do you think the reasons are that you guys have stuck around in fintech? Like, you obviously are both very smart, accomplished people. Why not try any other industry? What kept you around?
Well, I mean, at some level, I work at a generalist firm and I do invest in other categories. To the point I made earlier, fintech is just a thread that's woven in every single startup. And so I think having expertise in payments and transactions and fintech, it just comes in handy no matter the category that you're investing in. I know we call fintech like, hey, there's this world here and there's the non-fintech world. But the truth is that fintech is just this underlying platform that everything else sits on top of it. And there's always going to be innovation there. And exciting entrepreneurs want to build companies in this category. And given the background and expertise, both from CardSpring and Twitter, it just was a natural place to spend time once I got to Excel. And then to the point, like having that expertise, it's just such a helpful foundation as you look at any other kind of business.
Sheel, what about you?
I would say it started from like the background I had, which is really, I think, to Amit's point, you can connect everything and say anything is fintech for the most part, which I did. And then, but I knew folks in the fintech 1.0 era, including Amit. And then as I was thinking about if I wanted to focus on a particular area, when I started investing full time in 2016, I just thought about where the biggest opportunities were. And I thought about how difficult finances are for the average person. And I wanted to make that easier. And also financial services are 20% of global GDP. It's a massive opportunity that is inherently digital. And I want to see that be more digital. And it's called Better Tomorrow because I think it builds a better tomorrow, like makes life better for people.
And I will say, like for Sheel and Better Tomorrow, man, expertise is so critical when you're supporting these businesses, and verticalizing and specializing in fintech it's critical to be successful in the field, or it's such a big asset and weapon for Sheel. And his reputation with founders would explain that. I think it's also why you see certain partners at some of the generalist firms specialize in fintech, because it is hard to just kind of dip in and out. Like you really do have to go deep, and the nuances and how the markets are shifting. It's a bit of the battle I fight at Excel, but I think the strategy of verticalizing on something, which is, to be honest, like there's only a few categories I would say are evergreen. Maybe like security is evergreen and payments and fintech is evergreen. It's always evolving and changing. And it's also very conducive as people are investing in LATAM, they're investing in other markets. Fintech and payments is usually one of the very first things to like work in those categories, in those companies, and in those countries.
The question based off that then, if you take yourself back and put yourself in the shoes of someone that right now might be graduating from either undergrad or an MBA, do you still think fintech is one of the top area that they should be thinking about joining? Or could they look at something more like purely focused on AI or maybe climate change or something like that?
Yeah, this isn't a hypothetical. I mentor a lot of kids coming out of school. I run this mentorship program with the top 30 CS students at Berkeley every year. I've been doing it for 8 years. I have 250 kids. And I tell people to do your master's degree at Stripe, go do your master's degree at Robinhood. Like, these are exceptional companies, and the world-changing impact that they're having is like undeniable. They're just magnets for talent. And look, if you want to make a difference in climate change, if you want to make a difference in any of these categories, the tools and the training that Stripe, Robinhood, Affirm give you is as good as anything. And certainly if you go to Berkeley or any college campus, everybody wants to work on climate change, but they also went to college because they felt like they needed to go get prepared before they made that impact. And working at Stripe, my first job out of school was at Microsoft, and Microsoft is the do everything generic company at this point. And it was an amazing training ground for me. And I really learned how to be an engineer. I think, like, is the world shifting much more towards AI today? Is that the most important technology trend? I think absolutely it is. But the fintech companies have grown to such prominence because the impact is so significant. You look at the volumes that a company like Stripe, you look at the number of consumers that a company like Robinhood is touching, like, it's so impressive. And so I think it's still a great place to go and learn.
Yeah, for sure. I think, look, you should go where your heart takes you. But in terms of, if you're looking for an area that still has a lot of opportunity for growth, I think certainly fintech is one of them. To my earlier point, like, it still isn't as digital as it should be. And our lives will be more and more digital. There will continue to be opportunities for fintech. It's funny because, like, if you think about other categories that people invest in their sector-specific funds, they're actually a lot smaller than the opportunity for fintech. If you just think about it from a GDP perspective, macro lens, financial services is 20% of global GDP. Like, education is a much smaller slice. There aren't as many opportunities to build a big business there, but fintech is huge.
Yeah, and very specifically about fintech, because you can make the same argument about healthcare. It's such a big part of GDP, but the technology adoption has been super slow. Whereas I think consumers are pushing the state of the art.
Totally.
They're demanding better and better financial products. And so you see Affirm and Afterpay and Apple Pay and all these different products like really take hold. The legacy folks are having to react to the Robinhoods of the world. And that just hasn't happened in healthcare yet. Maybe this AI thing is really going to help, and there's a lot of talented people going after it. But like in fintech, it's really being led by the front of all these like emerging startups.
Yeah, no, that's a really good point. On the same front, is there a certain area or I should say plural, certain areas of fintech that you think would be the best for folks to dive into right now, whether it be more B2C focused, B2B, B2B2C, and then maybe even more specific than that?
Look, I think we invest in all those categories. I would say over the last few years, there hasn't been much investment in consumer fintech companies. I think there are a bunch of reasons for that. There hasn't been a lot of investment in consumer, period, and fintech as one example of that. But I still think there are opportunities there. Part of it is it felt like a lot of the low hanging fruit was captured in the time period we were talking about. Like in the early 2010s, you had the Chimes, Robinhoods, and others of the world get started. And they took a lot of the low hanging fruit, and those companies are doing super well. And you have to find something truly unique now to go after it. And marketing to customers is a lot harder than it was back then. When people were just figuring out what to do on their mobile phone, there was a good opportunity to market to them. Now it's a lot harder because they already have a solution for most of the things they need. But we do invest in consumer. I think B2B2C are great. I think probably a lot of money has gone into enterprise over the last sort of 5 years or so. And those are both companies serving other large companies, serving other fintech companies, infrastructure. And then there's also, Amit and I are invested in a company that sells to SMBs. And that also is a great category. So I'd say all the above.
Yeah, I think there's still tremendous opportunity. I would tell you, look, like Sheel is amongst the most sophisticated consumers I know on the planet. And he has 19 credit cards and he uses every digital product. And so he's probably on one side of the spectrum. But I would also
I honestly need to just do an episode with Sheel, like, okay, personal financial advice.
Yeah.
Give people their tips. Go.
100%. But I think like largely a lot of modern financial products still haven't crossed the chasm. Most people are not trading through Robinhood. Of course, young people are. And Chime is a
Well,
neobank.
one fascinating thing on this, though. So I went to Michigan State University and I spoke to the seniors in the fintech class that they have there a few weeks ago. And I asked them, I was like, okay, just out of curiosity, how many of you use like a neobank, like a SoFi, Chime, et cetera? And how many use a traditional bank like a Chase or a Citi? No one used a neobank. They all
What?
just used the old banks that their parents
100%.
used.
100%.
Yeah.
And I think that's because we can opine and have like silly little opinions. But what I would say is that there is a value of having a brick and mortar presence for these banks. And I think the purely digital,
Totally.
Certainly it works for certain people. I do think there's room for a Travis-like entrepreneur who can kind of wrangle the atoms and the bits together into like a next level opportunity, next gen experience. There definitely is so much more innovation that has to happen. I would also tell you, we're so early on the curve for some of the exciting companies that are already out there to keep growing into the opportunity. When you think about wealth management, when you think about personal loans, when you think about stock trading, when you think about personal banking, the truth is like none of us use a digital bank as our primary bank. And that is inevitably what's going to happen, I think, over time. And
Totally.
where the company Sheel's referring to called Coast, and I call it a red state company because they're selling to these SMBs who are managing fleets and limo companies and construction companies. And that's exciting because those sectors and segments haven't seen this level of just even being touched by modern financial products. So to me, like we have 90% to go, like we're 10% there. It definitely feels intimidating if you're a new entrepreneur because there are sophisticated entrepreneurs who've picked lanes and are going after them. And there's still lots of adoption. But I think as a country, like the next 20 years, I think are going to be really exciting for all of these companies.
Yeah, and I think the other thing I realized is that like college students don't have anything in their checking and savings accounts anyway. So having a higher
They're not great customers.
interest rate, yeah. So it's more so
But
like
it
they get
used
to be
to
like
be-
25 plus.
It used to be like when we were in college, Amit and I are of the same age, old age. Like the credit card companies were able to market on campus and they would try to do anything to get you as a customer and think the lifetime value was high on the credit side. On the debit side, Chime's whole thing is like get your paycheck early, and college students don't have a paycheck. And also like they make money on interchange and they're often not spending that much. And oftentimes colleges will have a deal with a more traditional bank.
Yeah, that makes a lot of sense for sure. Switching gears a little bit, I want to dive into some of your guys' personal career highs and lows. Because a lot of times we just see like, oh my God, like Sheel founded this amazing venture company. Amit is investing in awesome companies over at Excel. What would be some of the low points that you've gone through and then some of the highs that you've had, whether it be as a founder or as an investor, or maybe, one of both?
I mean, to be honest, we could spend the whole podcast on this. I mean, to be in this industry, there are very few people who, for everything they do, is up and to the right. But I think if you're in
Nobody.
nobody basically, right? You read the stories on Twitter, it's just not true. I started 3 companies and no one starts 3 companies if the first 2 are successful, right? And even the third one, it was like an okay exit to Twitter. And you look at all the missed opportunities or the different paths you could have taken that could have led to like a bigger outcome or bigger success. But those are just steps along the journey and threads in your personal quilt of learning, and you accumulate experience and you accumulate judgment, and you accumulate a network and credibility over time. And the Twitter acquisition was a really pivotal moment for me in my career, and it opened a lot of doors for me. And I think about this concept of being in the jet stream and having driven my personal car way off road, being at Twitter at that time, 2014 to 16, I was like being back on the highway, and it bootstrapped me with a incredible network and credibility out in market. And there's no way I'd be at Excel without that Twitter acquisition. And even though it was a road bump or a blip in the history of the company, it was like very meaningful for me personally. And I'm super grateful to the company and the network that it gave me. People from Twitter are all over the valley, and it's been invaluable for me in my venture career.
Yeah, similarly, actually, Fee Fighters got acquired by Groupon. It was something that Sean and Josh really wanted to do. I was not that excited about it. I wanted to keep going, but it got me where I am, and that was awesome. And I'm so thankful to have that initial bump. And also the more important thing is actually moved me from Chicago to San Francisco. I think we were based in Chicago. I thought at that time that you could do everything there. There's no reason you should move to San Francisco. I'd spent a lot of time there, but I thought I don't need to move there. And Fee Fighters, or when we got acquired, I was forced to move to San Francisco. And I think it really just greatly expanded everything. Like my mind, what I thought was possible, the types of businesses that I thought were possible, my network, all of that stuff happened in 2012 for me.
And then as an investor, and I'm sure Sheila has similar stories, and I know because we've talked about it at nauseam, the investing game really tries your psychology. And of course, being a founder is harder and all your eggs are in one basket. But, it's really hard to be a great investor. It's really hard to find excellent companies at two people. The mission of an investor is to find the most important company in the world when it's one or two people. That's crazy, right? At some level. And I remember being in investing, and they have this ridiculous expression, which only finance people could come up with, which is like the lemons ripen before the fruit. If you've heard of this, I'd been in the job for 3 years and I'd made a bunch of investments and some of them hadn't worked and I didn't really have any markups. And then of course, COVID hits, this freaking pandemic hits. And I'm like, all right, well, that's cool. I had a good run. Like that was great. But COVID obviously was a big accelerant. And I made a couple good investments that year. It turns out two of the investments I had made previously turned out to be pretty good. And suddenly I entered the year what I thought was like 0 companies that were working and exited with like 4 companies that were working. And so that was like wow, the first 3 years were really tough. And then suddenly it felt like things were working. And then on the other side of COVID, as things slow down and there's a pullback, you have companies that are over-rotated because they've been valued at high prices. And that's a totally different kind of pain. There's a pain when you work on something and it's not working. And then there's a pain on something where it looked like it was working and there were a lot of signs and now there's a pullback and now you're really trying to like regroup and keep your momentum and your morale. And it's a really long game. And I think the pro and a con is a double-edged sword for sure. That's why you want to be in it with people who have a very long-term perspective. And the Valley, to your point, is really good at pushing out people who are very short-term oriented. Like there might be small wins here or there. Sheila and I have known each other forever. And that trust and that relationship is one of the reasons why we work on companies together is because
Totally.
You know how each other's thinking, the other person's reliable, and you kind of know how the other person's wired.
Yeah. Well, on that front, both founders and investors need to be pretty good at thinking about what the world's going to look like in the next 5 to 10 years, right? So when you guys were just starting out, what's something that you thought would have been accomplished by today in fintech, but hasn't? And then something that we have already accomplished that you thought would have taken longer?
I can go with what I thought would have been accomplished.
Yeah.
So I started in the world of payments and I thought that we'd be able to at least decrease the importance of the card networks. And like there would be some merchant consumer business that was able to take over from Visa and MasterCard, whether it was Square or some like mobile coalition or I didn't think the mobile coalition or the grocery retail coalition was going to work, but I thought something where we would be paying with our phones and the card networks wouldn't be there. Could be real-time payments, something like that, but really hasn't really made a dent. Visa and MasterCard have continued to crush it.
Yeah, no, that's a good point. I often get a lot of payments related ones when I ask that question, but I hadn't gotten that angle yet.
Yeah. And I'll tell you the flip side. I think it's a miracle you can pay with Apple Pay. Like the amount of work that must have gone into that, it's the magical dream. People go without using their credit card now. They just swipe.
Totally.
It's such a seamless experience. It works almost everywhere. It's shocking. It works in other countries. It's so easy. And I just remember this era where if you left, like, what was the MasterCard thing? Like, don't leave home without it. Like, you actually leave your home without it. Like, it's fine.
Totally.
And I think we take it for granted, but it's for anyone who's worked in fintech in the early 2010s, like, it's a freaking miracle because
Totally.
been talked about ad nauseum and the amount of coordination it would require. And of course, it took a company like Apple to drive it, but it is magical.
And something like COVID to drive adoption of it.
Absolutely.
Yeah. Mm-hmm.
It's a once in a lifetime pandemic. No big deal.
Literally. All right. Now you each need to reverse it.
I think I've been surprised at how popular and how much trust people are willing to put into apps like Robinhood. Like I met those guys, Vlad and Beju, like early on, and it was like a free trading app. There were others before it, but they just crushed it. They executed really well. They had better design. They were reaching a different customer demographic than those that came before it. And now, and I remember talking to the CEO of a very large bank in 2016 who basically like laughed it off. And now Robinhood's probably bigger than that bank is. And I've moved the vast majority of my money to Robinhood, actually.
Wow. I guess I'll give you a crappy answer. I'm just thinking about what we were working on at CardSpring. Two things popped into mind. Like one, I'm still shocked at how backwards the infra is that our payment rails are built on. So much of it is like FTPing files around, like how settlement isn't instantaneous. It takes a couple of days for it all to pass through. It's crazy to me. And I think you could bucket with that the Swift system. There are a lot of people now going after Swift, but just instantaneous money transmission around the world. Shocking to me that we don't have that as much. There's like Venmo, there's like little dribbles and drabs of it. But if you're really trying to send a decent amount of money to someone, you still have to go through this like 2 or 3 day process of sending a wire. Like, it's crazy to me. And I'm shocked. I mean, it's like one of the fundamental building blocks that you might think of when building a fintech or payment system. And it's still Swift. And there's stable coins and all these different approaches, but nothing has really reached mainstream. You still have to I still have to call my person at the bank and have them like trigger the wire, and it's super manual. And it's
Totally.
like the biggest advancement in the technology of wires that I get to send an email now rather than have to walk into the Wells Fargo bank. Like, I actually remember that one of the reasons I transferred my money out of Wells Fargo is because the only way I could send wires is that I actually had to go to a bank branch. And I was like, well, I can't do this anymore. And SVB was really nice. And they said, well, you can just send us an email. And that is the state of the art in wires. And that's crazy to me.
Bro, you got to get on Mercury. You just upload and it automatically does it for you.
Yeah.
I know. But
I have used that feature on Mercury before. I don't send wires very often, but like the 2 to 3 times I have was great.
Oh, I use it all the time. Capital calls, I just upload them and it sends them for me automatically, plugged from Mercury.
it's awesome.
I'm just not cool enough to have to send capital calls out. So that's why I don't need it.
Still very cool when you're doing it. Let me tell you.
Question actually then on the payment side of thing, if we were to do that, over the next 5 years, do you think we'll have accomplished that much more in payments, or do you think it's going to take longer than that to really move things, since again, like there's all this old architecture around?
I would give you the truism that we vastly overestimate what we can get done in 1 year, but we vastly underestimate what gets done in 10 years. And you picked 5, which is somewhat in the middle. But I would just tell you that when we look back at 2012, which is over 13 years ago, man, a lot's changed in that time. So if you look forward and think about 2035, I just think it's going to be a completely different world. And it's hard to know exactly how or what. I suspect you'll have a different answer from those Michigan kids next time you go.
I agree completely. I think a lot of us had some hope that there'd be more likelihood of real-time payments, but it hasn't happened. Until it's mandated, it's not going to happen. But and a lot of banking would need to be rethought, and how they make money would need to be rethought there. But that would be awesome. And this sort of like global Venmo is something I really wish exists. It's, as somebody who travels a lot and has friends all over the world, it'd be awesome. Fling money is kind of an interesting idea. It doesn't work for India and several other markets that I need, but it's cool that we're moving in that direction.
Okay. One other thing I'd love to dive into a little bit is, looking back, I asked what areas you thought would still be good places for kids to join coming out of school. Are those the same areas that you'd want to be investing in, or does that change at all based on rephrasing the question a little bit?
I think it's one of the best times to invest in technology ever. Anytime there's a big change or dislocation, there's going to be new emerging winners, and there's an opportunity for a technology overhaul or a readoption across all sectors. And I think it's one of the exciting things about the AI stuff is it opens up new sectors that maybe previously weren't possible, or maybe the technology was just too complicated. And now the interface is voice, or there's so many ways that you can insert and package this technology. I think it's a great time to invest. And that's true in fintech and it's true outside of fintech, but I think it's a particularly very exciting time.
Yeah, couldn't agree more. And I'd say, like, we've done a lot of investments in the AI intersecting with fintech area. And even our companies that are not in that intersection, like they aren't AI companies per se, they're seeing so much value from AI that, to Amit's point, you're just seeing a lot of change. And that's a great time to be coming into business or joining a company.
Yeah. How has AI shaped which areas you want to invest in fintech? Obviously, there's some that are more hot right now. So like accounting, obviously really big one that's hot in AI. Are there any other sectors like that? Or like maybe you're open back up to more consumer side because of AI changing the dynamic a little bit?
Yeah, I had this thesis that AI was going to change things for consumer a little bit. So yeah, I thought ad targeting would get better for one. It hasn't played out that much. Like I've been thinking about this for the last couple of years. We still haven't invested much in consumer, but our consumer companies have not seen as great benefits as what I thought, but still interested in it. Aside from accounting, there are all sorts of other businesses, anything that requires people. We have one in the credit underwriting space, meets AI. We have one in the accounts receivable space. So anything, it's really just like services as software. And I think there are a lot of opportunities for that across every category, mortgage and other.
Yeah, I totally agree. What's interesting though about the AI stuff is that it really makes it easy to interoperate between data. And a lot of fintech is based on really well understood specs and transactions that are automatically processed at massive scale. And some of the AI automation that we're seeing in other categories, I think is being less effective at fintech because transactions are automated. They're all digital, they're all processed. That's already been happening. I think where Sheel's referring to is you're seeing a lot of human processes in and around fintech start to be disrupted, whether it's debt collection, whether it's accounts receivable, all, accounting, certainly all of those categories. I think I'm still trying to make sense of it. I think we probably all are. It's still ridiculously early in the AI wave and how it's going to impact things. It's at some level, it's like the iPhone moment. Not every great idea on the iPhone was invented within the first couple of years. It took time for people to really internalize the primitives, what it could do. And in this case, the primitives are changing. The core models, their capabilities are changing. What's possible is changing on our feet so rapidly. So it's a really good time to be a founder if you can keep up with the pace of innovation and you have a really clear idea of what you want to build. Like, it's awesome.
Question then to wrap this all up. If you give yourself one piece of advice when you were starting out in fintech 10 plus years ago, what would it be?
I think it's the same as being an engineer, which is like really understand how things work. That's the good engineers can solve problems, write algorithms. The great engineers, they go deep, they understand how the system works down to the studs. And I think the people who've had the most success in fintech aren't just the people hey, look, there's this problem in front of me, I'm solving it, but like really understand the stack. They understand how all the constituent pieces and parts fit together. And if you understand that, you are prepared for all the changes and evolutions and innovations that are happening. And the folks who really love fintech and have gone deep, like those are the people who have the staying power in the category. And it's certainly true for Sheel, and the rest of us are trying to keep up with them, but that's okay.
Yeah, right. I do have to say that I was talking to another investor a couple of days ago at this conference here in New York. I had mentioned like having multiple portfolio companies with Amit, and he said, "Oh, that's a flex. Like just having portfolio companies in common with Amit is a flex. Look at this guy."
Well, to be fair,
Honored.
Amit, like the Steve of India, so he could have been interpreted to be.
He's talking about you.
Oh, geez.
But what I'll say on the question is probably something similar, which is like a lot of the infrastructure hadn't really been built yet. And I think V1 of fintech was just bringing stuff that was offline, online in some kludgy scenario, kludgy way. And then the infrastructure got built over time and it was really hard to build in the early days. And so the folks that were able to make it, like were able to build this kludgy solution and make it work. But building was tough. You needed to raise a certain amount of money. And then it got a lot easier to build because the infrastructure came. But I think I probably wish I had invested in infrastructure earlier.
There you go. Well, Amit, Sheel, thank you so much for joining me. I'm super excited for this episode to air. And I loved the banter back and forth. Like I was telling Amit before we get started, it always works out so much better when the two guests that I have on in the episode know each other. And again, almost roommates at one point. I think that takes the cake so far.
Awesome. Thank you, Julie.
Thanks,
Appreciate
Julie.
it. Cheers.
Amazing.
Thanks.
Thank you guys.